For this video here, we are going to see the trading tactics depending on the penny bar candlestick formation. When I say the trading tactics, I mean the points that we can use to enter all of the market basing on the penny bar candlestick formation. Of course, in general, we have two major entry points that we can enter the market basing on the penny bar candlestick formation. The penny bars can be the bullish ones or the bearish penny bars. But a question comes, how can I get such entry points? Of course, you have to first determine or identify the trend of the market. Whether the market is an uptrend or a downward trend, you also have to first find the levels or spot the levels. Such levels may be the resistance and the support levels. Another thing that you have to do is to identify the penny bars in the trend. So if you find the penny bars near the levels, I mean the support and resistance levels, in line with the direction of the trend, the second step is to know how to enter the market based on the penny bar candlestick pattern. And according to my experience, there are different entry points when it comes to trading penny bars, and it all depends on the anatomy of the candlestick. And another thing that will depend on when trading the penny bars is the market condition and how you manage your money. In simple terms, your money management strategy. So let us look at the first entry point. As I have already told you that we have the aggressive entry point, and this method consists of entering the market immediately after the penny bars close without waiting for a confirmation. With the aggressive entry option or entry point, you have to enter the market immediately after the penny bar closes without waiting for a confirmation. And this strategy will help you catch the move from the beginning, because sometimes the prices go higher after the close of the penny bars. And if you are not in the market, automatically the trade will leave you out, or the trade will leave without you. And this can be illustrated as you can observe. We have our support level, and for this case, this is a downtrend market, and we are having a penny bar forming after a pullback. So we are having our stop loss, and at that point where we are having a penny bar, we are seeing that you have to enter the market after the close of the penny bar setup. And at that point, the support level becomes the resistance level. You can observe very clearly that after the formation of the penny bar, the support level became the resistance level, because at that point the prices were rejected, and we are seeing the continuation of a downward trend. Therefore, the chart above shows how an aggressive entry point could help you execute your trade in the right time without being left out by the market. And as you see, we took this trade because we had three important elements. So at that point, after formation of a penny bar, we entered the market, as you can see. But for this case, it was a downward trend. So here is an explanation that we took. We have, or what we are seeing here, entering such a market whereby the support level becomes the resistance level, meaning that the prices were rejected by the sellers, and now the market continues in a downward trend. It means that the sellers are still in control of the market. So we took such a trade because of the trend. As you can see, the market was trending down, and in such a case, we look for selling opportunity. As you can observe, the market was trending down, and we have our support level. So another factor that we based on is the level, and in the chart we had a support level that becomes the resistance level. And another factor that we based on is the signal. A penny bar was formed after a retracement pullback from the resistance level. So we have, it was a pullback from the resistance level, and then we have our penny bar forming at that point, as you can observe. So when you have these three elements in the market, you just place your trade after the close of the penny bar and your stop loss above the lower tail. Of course, you can see the stop loss. You place it above the lower tail depending on the market levels. Therefore, you can also place your take a profit, or the profit target will be the next support level in case of a downward trend. Of course, when this market continues in the downward trend, time comes when we have to need a support level, and at that point it is where we place our take profits, or what we call the profit target. But it comes for the case when the market is a downward trend, and such elements are quite enough for you to find high profitability entries in the market. And here is another entry point that we have to understand. The second entry point that we can use to enter the market basing on the penny bar candlestick formation is the conservative entry option or point. So this strategy consists of entering the market after a 50% of the range bar retracement. This strategy sometimes work, and it gives us more than 5-to-1 risk to reward ratio, and sometimes the market will leave without you. But you can observe this in this illustration of a downtrend market. Of course, the market is in the downtrend, and we are seeing our resistance level. The stop loss is set at the top of the penny bar, and we are seeing a 50% penny bar replacement entry. As you can see, the green line highlighted. So it is a 50% penny bar retracement entry. As you can see, it is half the penny bar. So it is called the conservative entry option or point. Therefore, someone, it may be a buyer or a seller, enters the market after 50% of the range penny bar retracement, and it gives us 5-to-1 risk to reward ratio. And at that point, the market will leave without your trade. So in the illustration above, we get an idea about the power of the conservative entries, and as you can see that this entry method helps us decrease our risks and increases our rewards. Therefore, the trade above has more than 5-to-1 risk to reward ratio, and one trade this month is quite enough to generate a decent income. You can observe more in this illustration. We have our support level. For this case, this is an uptrend. So we are seeing our penny bar forming in the uptrend, and we have set our stop loss at the end of the penny bar candlestick. So with the conservative entry point, we enter the market after a 50% penny bar retracement move, as you can observe. So, and at that point, the support level becomes the resistance levels, and afterwards the prices are going to be rejected, and the market continues upwards. And what you have to master is one of the drawbacks of this entry option or point, I mean the conservative entry point, is that the market sometimes does not retrace to 50% of the range bar. This is a point to note. You have to understand this point, that sometimes the market does not retrace to 50% of the range penny bar, and this will make you feel frustrated because the market will move to the profit target without you. But you have to understand that there is no wrong or right entry option. They both work great, but With the sequence time and experience, you'll be able to decide whether to trade aggressively or consecutively. I think we have got to understand the trading tactics depending on the penny bar candlestick formation and at what entry points should we enter or leave the market. And we are done with that. We have two entry points, the aggressive one and the conservative one. The points to note is that the conservative one, we enter the market after a 50% retracement move of the range bar. That's the difference between the conservative and the aggressive entry point. Thank you for watching. I think this is enough for now. I'll be seeing you in the next video, but I request everyone, if you are new here on this YouTube channel, to at least take your time, subscribe, also turn on the notification bell, and it will help you get notified in case I drop a new video here. Thank you for watching.